What is going on, people? It is December 30th. In this video, I want to talk about Tectonic and the platform in general. You guys saw my previous video talking about it, but you can also tell that, for the past whatever time here, for the past month or so, VVS Finance and Crypto.com has been one of my favorite coins for a while now, but recently it's been also VVS Finance, which is also a product of Crypto.com's ecosystem on the Corona's chain. And recently it's been Tectonic Finance for me as well. The past week or so, I've been really doing some heavy research for you guys, so you can just want to share some knowledge. If you guys don't know, Tectonic is basically a platform for lending and borrowing crypto, basically. So let's say if I have some Crypto.com, or if I have some Bitcoin, or I have some Ethereum, what I can basically do is to go to on that platform, say, hey, I have $1,000 worth of Bitcoin. I need some money. I don't want to sell it. I just need a loan from you. I want to use my Bitcoin or my Ethereum or my Crypto.com as collateral, and I can just take a loan out of that, and then I can go ahead and do whatever I want with it. But in this video specifically, I want to show you how to kind of use the platform very quickly, and also what my strategy has been for the time being, so I can earn Crypto.com, I can earn VVS Finance, and I can also earn Tectonic token, which is TONIC, all in one go. So I have my long-term holdings so far are Crypto.com and the VVS Finance. On the platform itself, we can't use VVS Finance so far as a collateral to take a loan, but I can use Crypto.com. I'm holding Crypto.com for a while, and I want to get some loan out of that so I can actually reinvest it back in the ecosystem and earn VVS Finance on it, and Crypto.com and Tonic. So I'm pretty excited to show you guys. But in this video, I'm just going to show you what the Tectonic platform does, how to put my Crypto.com as collateral on the chain, and let everything just kind of generate for me money like that, just to grow the money without really having to buy or sell anything, basically. So let's just get to the platform here. So this is the actual platform here, as you guys can see. Tectonic Finance, basically. So I have my wallet connected and everything, and you can see here we have DAI, USDT, USDC as well, wrapped Bitcoin, wrapped ETH, and Crypto.com. If you go to the white paper, which I highly suggest you guys do that, because with taking out loans and lending and all that stuff, there's also always the risk of liquidation. So let's say, for example, if I come in, I put Crypto.com, which is worth, let's say, $1,000 at the moment, and I take a loan based 80% of that value, which is what's called a collateral factor, basically. If I put in it's $1,000 at the moment. If I take the loan, I take $800 loan based on that, and then what happens when my Crypto.com starts to whatever I put in now is valued at, let's say, $600. I'm gonna get liquidated almost $200 out of that, or whatever the case might be, to get me at the 80% collateral factor, or TVL is basically what they call it. So there's I highly suggest that before you get into any of this, go read the white paper. I'll leave the link in the description for you, so you can read on it. Please read it, check out the risks, and plus there's so many good information here, so many good examples of how to use the actual platform, but you really need to understand the risks behind this. So this is the actual platform. We have DAI, USDT, USDC as stable coins. We also have wrapped Bitcoin or wrapped ETH. I'm not really interested on those for the moment. I'm interested in putting my Crypto.com and take a loan based on that. So what I'm gonna do is, you'll also see here that there's supply APY and borrow APY. If you're supplying this to the market, meaning that, hey, you want to offer it for lending, this is what you get paid as in terms of APY. You can see there's two numbers here. There's 3.78, let's say, for DAI, and 8.62 here right up below it. Or let's just talk about Crypto.com. There's 12.77, looks like it's the highest APY. So if I bring in my Crypto.com to this platform and I put it up for lending, I will get 12%, 12.77% based on whatever I put in, and also on top of that, I'll get 9.35% of TONIC token, which is the Tectonic's native token. So which is pretty good. Now also, if I'm trying to borrow, so if I'm trying to get a loan out of this, I will have to pay 14.69% in terms of interest, but I will also gain 9.6% of the actual TONIC token. So the 14.6%, if you're borrowing, you'll have to pay it. I saw some other videos talking about this is also paid to you. I don't really think so. To be honest, I went through the actual white paper, and they use this as an interest accrued. So you really need to pay interest on top of that. But again, guys, let me know if I'm wrong. But so far, this is what I've read and what I did the research based on. And 9.6 is where you actually still get interest in terms of tonic token on both ends if you're supplying or if you're borrowing. So if I go right here and I put in my crypto.com, and so let's say I want to supply it to the market because I need to put some collateral so I can get DAI. So what I'm trying to do here, guys, is put in my crypto.com. I have 500 crypto.coms right now as an example. I created a new wallet for it, and I want to put it here so I can take some stable coins out of that and go put it somewhere else so I can earn VVS finance, and I can earn whatever I want. Basically, I can go provide liquidity, I can go buy something else. You're free to do whatever, but for me, I want to let it generate passive income, or passive, just to passively get me rewards, and so I can maximize those basically. So crypto.com, I come in, I press on supply, my wallet is connected, I have my phone on me because it's going to prompt me on the phone to actually do that. So I'll go and put in supply. My max is 520. I want to put in 500, for example. I'll press on supply. It's going to ask me to confirm my transaction on the wallet. So I'll press confirm here. So there we go. It says that the transaction is confirmed. So now I'm actually supplying to Tectonic lending. Basically, people can start I can start earning on that. And but you really guys need to understand is market details. These numbers are extremely important. Just to give you an example, the most important one is the collateral factor. It's telling you that it's 80%, and what that means basically is if you are, if the value of my crypto.com that I put in was almost at $230 or $240, I can only take out 80% based on that. And this is what the liquidation starts to come in. If the value of my crypto.com, this is so if crypto.com continues to move down here, and the value of whatever crypto.com I put in starts to exceed or go below 80% of what I actually put in, then I start getting liquidated. That's not good basically. So you need to always keep that in mind. Make sure you actually read the white paper basically. So 80% collateral factor. Anyway, so now I supplied my crypto.com, 499 crypto.coms. Now I can borrow $224 worth of any crypto basically. So now if I go to dashboard, you'll see here that so far I have supplied assets of crypto.com this watch. I'm earning 12.75% on it in terms of crypto.com, and I'm also earning 9.35% of the Tectonic native token, which is called TONIC. Now I can actually go and borrow. So I can go press on borrow. Now I can borrow whatever I want from here, except for the coin that I actually used as collateral. I don't want to use wrapped ETH. I don't want to use wrapped Bitcoin. I want to, take out whatever I would pay basically the least on for the time being. So for now, I'll take out my USDT. And what I can do here, I'll just take out whatever max. So you don't have to go all the way up to 72% or whatever the case might be. You can if you wanna be a bit more cautious, you can take out instead of the 224, maybe I'll just take out 200 so that I can give my crypto.com enough leeway for it to not start getting liquidated. So basically, I'll take out $200 here, and what does it say here? So max time is 3. So let's see. So borrow limit says 224. Oh, sorry, I was actually supplying. I want to borrow it. Max is 200. So $200. I'll just keep it at, let's say, maybe 150 just for the sake of it. This here, guys, is very important. This is called the lava bar, and it tells you your account health. If it's full, you're at risk of getting liquidated. Repay your loans or add more collateral to lower it. So let's say if it starts to get too extended to the side here, you're at risk of getting liquidated. You got to keep that in mind. And what you need to basically do, if it starts to get close here, you'll need to add more funds so you don't get liquidated. And that's the lucrative, I guess, aspect of this whole thing. But so far, 150. I'll borrow $150 based on that. Keep in mind, I haven't sold my crypto. I still own my crypto.com. Now it's prompting me on the actual app. So let's just do that. And then we'll give it a second. So boom. Transaction confirmed. Now if I go to my wallet, if I go to the dashboard here, you'll start seeing that I have supplied my crypto.com, earning this much on it and this much Tectonic. Now my borrowed assets, I actually borrowed $150 from that, and I'll have to pay 3.95 interest on it. So that's good because my CRO will start, is growing at a faster rate than what my USDT is. And not only that, I'm also earning TONIC token on it. So now, with that being said, I still have $52 that I can actually take out, but I want to give it some leeway so I don't get liquidated. My balance is 150. So, two things I can go and do with that. You can go and do whatever you want with that money. It's in your wallet. You can cash it out. You can do whatever actually you want with it. You can go to other places where you can put in, or you can even go and buy more crypto.com with it. And then again, come here and supply it to the actual for lending. So you can even take out more loan out of it. It wouldn't be what, $150. You can even probably take $200 based on that. But what I'm trying to do, just to show you how to use the platform and show you my way of earning VVS finance, earning crypto.com, and also earning TONIC on top of all of that, because it's a trifecta. These crypto.com, is backing all of these, in my opinion, Tectonic and VVS finance, and I want to kind of be in the whole ecosystem. But there's so many different ways you can go about this. So if we go to VVS Finance, guys, there's two ways we can actually earn. VVS Finance, I can provide liquidity, and there's so many different pairs for us to provide liquidity on. But the biggest thing I want to provide liquidity on is the least riskiest thing, which is USDC, USDT, because there's something called impermanent loss with all these other ones. So for example, if I want to put in VVS USDT, if the price of VVS goes up high, higher than this, or drops, then I am at risk of impermanent loss, and I don't want to do that. I want to kind of go to sleep with the peace of mind that I'm just generating passive income using this, and I don't want to incur any impermanent loss, and deal with all of that. I want to have this just running on its own. And the best way to do it is using stable coins. USDC to USDT will never, always going to be around the same price, which is the dollar. It's a stable coin, but everything else here is at a risk of impermanent loss. So I'll come in, I'll put it in my USDC, USDT. There's an APR of 16.7% on it. So I'll earn 16.7% on that. And I also earn some VVS as well on it. So now to provide liquidity, I'll show you quickly what we can do here. Basically, I took out $150. So, I'll just take $100 to actually put it in USDC, USDT. And then I'll show you what I can do with the $50 that's remaining. But so for us to supply liquidity, in terms of $100 for USDC and USDT, what I should do is basically split the $100 in the middle for USDT. So $50 USDT, $50 USDC, and then come in and put it here basically. So what we need to first do is to swap my current USDT to USDC. So USDT, I have 150. I want to have here also $50 worth of USDC. This is how much it's going to cost me. I'm going to swap it first. That's before I provide liquidity. Confirm swap is going to show up on my app here. I will confirm that very quickly, and we'll give it a second. So transaction submitted perfectly. So now I have $50 worth of USDC and $102 worth of USDT. So now what we'll do here, you have USDC to USDT. That's what I want to use. I'll go get USDC, USDT LP. And what we basically need to do here is to provide liquidity for both of these two. So what I did already, guys, I already have my USDT. I had $150. I need to split that basically into the liquidity. So $50 to USDC, $50 USDT. So I can provide that liquidity. Now I come in to provide liquidity, add liquidity, and based on that here, so get USDT, USDC pair. And basically I'll max out how much I want USDC to USDT, which is gonna come up to being $50 to $50. So 49 here to 49. I'll press supply, confirm supply. Now it's gonna show up on my app here. So confirm, perfect. So transaction submitted, boom. So now based on that, I'll get something called an LP token, which is a liquidity provider token. And if we give it a second, we get transaction receipt. And now it's going to show that I have a USDT to USDC LP token. So now what we can do, we can go to earn, we can go to farms, and I can go down again to USDC, USDT. I'll press on it. I'm going to go to start farming, stake the liquidity token that I actually just got, confirm. It's going to show up on my app again, confirm. So now I'm providing liquidity. You can see here it's $100, which was split between USDC and USDT. I'm also earning VVS on it. Great, good to go. Now, the other way we can actually earn VVS on, or anything else on the VVS Finance network, I can auto stake VVS. I can earn TONIC if I want. TONIC is the same thing as Tectonic. You can see how this whole thing is kind of, interconnected. I can earn, I put it in manual VVS, or I can add, Beefy Finance. So what I need right now, the remaining $50 that I have, I'll switch it to VVS and I'll put it somewhere here. So what I can do, I'll go to trade, I'll go to swap, and whatever is remaining from my USDT, which is 52 bucks, I'll max it out. I want to switch it to VVS right here. I want to max it out and then swap it. Confirm swap is going to show up on my app here. Confirm. Transaction receipt successful. Perfect. So now I have my VVS. I'll go to earn. I'll go to mines. I want to put it, the highest APY here is basically for auto VVS. You can also put it at TONIC if you want, but I think I'm already earning TONIC on the other platform. I want to accumulate more VVS, so I can do that. So I'll press on stake my VVS. I'll max it out. Confirm. It's going to show up on my app again. Perfect. That's it right here. So you can see that my VVS is staked already. In the bottom, everything is good to go. Everything's staked. So far, guys, just a quick summary and everything. I took out my CRO. I put in 500 CRO, which is worth $280. Out of that $280, I didn't sell it. I just provided it. That is getting me 12.75% APY. And it's also getting me 9.36% as well. TONIC APY, here I would have to pay 3.9% based on this loan that I just took, but I'm also earning 9.51% based on that $150, but I'm getting that in TONIC. Not only that, I took this money, I went to VVS Finance. I have two things running that are earning me, basically VVS and as well Liquidity token rewards. So I'll go to farms. It's showing me that I'm involved in the USDT USDC. For some reason it's just not saying that I'm staked already. Yeah, I have this staked already. This $100 staked here, which is earning me VVS. It's also earning me the liquidity pool rewards, which is all the trading fees that are happening on VVS Finance. I'm getting also rewards from that, and I'm also getting the APY of 16.76%. Then if I go to swap, I go to earn, I'm also earning from mines. I put in I switched the remaining $50. I switched that to VVS, and I have an auto VVS, and it's generating me, so at this moment 300% in terms of VVS, and everything's looking good. I haven't sold my crypto.com. I didn't sell anything. I just took a loan based on that, and I'm just trying to accumulate more and more as time moves forward. I just put in a simple example, 500 crypto.coms, which is worth like 200 and some dollars. Imagine if you have, I hold a lot more CRO. I can just come here and I can use it. But again, there's a lot of risks with this, guys. Make sure you read the white paper. I'll leave it in the description. But this is giving you so much freedom to go about doing things. Your crypto doesn't only have to be, you don't have to just only hold your crypto. You can use it and you can maximize your profits and earn rewards the way, real wealth is actually built. So this is what I want to do. Hopefully, let me know how would you go about earning rewards, and how would you go about using the Tectonic platform. Let me know if you have any questions in the comment section below. Hopefully you learned something, a couple things from this video. Appreciate you watching. Subscribe, like, share, do whatever you gotta do, man. Appreciate you. Have a great day.